This year, you'll be given the craziest opportunity to build wealth, and we'll go over everything you need to do to make 2022 and 2023 your best financial years yet. First, obviously, let's talk about what's happening to the economy right now. Inflation is at 8.3%, which is tremendously high if you compare it to the last 10 years, where it hovered in that 2 to 3% range. It hasn't been this high in 40 years. Yup, and not only that, but we saw the US economy shrink by 1.4% in the first quarter of 2022, which is exactly the opposite of what happened in all of 2021. More and more Americans are worried, with 6 out of 10 concerned that a major recession is right around the corner. On May 4th, the Federal Reserve announced an additional 0.5% interest rate hike, which would bring the federal funds rate to between 0.75 to 1%. And that means that just 2 months after the previous hike of 0.25% in March, we are seeing another really drastic bump. Increasing interest rates combined with supply chain issues, the Russia-Ukraine war, and an overheated economy as a result of loose monetary policy have led to some pretty crazy recent events. This quantitative tightening is in stark contrast to the quantitative easing we saw during the first 2 years of the pandemic, when central banks went out and bought a ton of assets like all the different types of bonds, right? So then they realized, oh shoot, there's too much money in the economy, inflation is way too high, so now they are trying to actually sell those assets that they bought. More specifically, the Fed is trying to sell about $95 billion in bonds from their balance sheet each month, which would thereby reduce liquidity by about $1 trillion this year. So-called experts have been calling this recession since 2009, and it looks like there's a chance that they could finally be right. Of course, we may not see a global recession just yet. It could take months to hit or longer. However, this recession could be different, lasting longer than previous recessions due to stagflation, the oil crisis, and of course, the rising interest rates. Experts are suggesting that we could see a U-shaped recession, meaning the bottom could last a year or longer before recovery. But no, I'm not calling that there is going to be a recession, because studies show that even economists correctly predicted only 5 out of 153 recessions between 1992 and 2014. But I will say that the risk is higher today than it was a few months ago. So this brings us to the point of this video, which is to help you, the viewer, do the right things right now to make money. Time is of the essence, and this has been proven time and time again, as most millionaires are actually created from recessions. So first, let's talk about investing your money during a time like this. Since 1937, recessions have resulted in an average decline in the S&P 500 of about 32%. Right now, the S&P 500 is down about 16% year to date. The Dow Jones is down 12%, and of course, the really tech-heavy NASDAQ is down more than double that at 25% decline. Historically, the market behavior has been shown to follow some trends before the recession. For example, the markets usually peak 3 to 6 months before a recession, falling about 10 to 15% ahead of it. Looking at the yield curve, we can see that it's starting to flatten, and it actually became negative for a little bit in April of this year. Now, with all that context, let's talk about whether or not you should be buying the dip. The thing with stocks is that people get rich with them in the long term, but people get poor from them in the short term. Why? Because of human emotion. As much as I'd like to say that retail investors make financially sound decisions all the time, that just is not the case. And when you buy a stock and expect to make a profit in the short term, this is actually extremely dangerous. And if it falls, then emotions take over and you sell. If it is a sound company with actual earnings and growth, then the correct thing to do is actually hold long term until you think that company is on the decline. The stock market is not rational, and a company's share price is not always indicative of how the company is doing fundamentally. That is why if you are considering buying the dip, expect to hold for 10 years or longer. If you don't, then yes, the markets could very well keep dipping and you might liquidate your position at a loss. Essentially, you'll be disappointed if you expect the market to bounce back up to new highs very soon. So yeah, looking back, you guys, yes, it does make a lot of sense why we are seeing this slump in prices. The pandemic injected a lot of money into the economy, and a lot of the growth companies saw huge growth rates. People love seeing that, and as a result, there were more buyers for stocks than sellers. This type of growth is far from sustainable, and those sky-high PE ratios meant hype was really baked into the prices. We just need to sort of zoom out to see that, hey, this is still okay right now, and the S&P 500 is about 10% higher than it was at the beginning of 2020, and right now we are at more of a hiccup in the economy. Just because the stocks have been going down does not mean a global recession is 100% imminent. So for now, Now consider S&P 500 index funds, dividend stocks, which could actually benefit from inflation, and of course I-bonds, which are virtually risk-free investments that are backed by the US government. And fun fact, they're actually paying over 9% interest per year. Warren Buffett really said it best. Investing in a diverse mix of companies over a long period of time is how you get wealthy. Don't put money into individual companies unless you yourself have intense conviction about them. The data proves this, as index funds on average vastly outperform investors who try to pick individual companies. The reason? A lot of companies fail, and a handful of them will actually drive returns way more than the other hundreds or thousands do. This results in the fact that tails drive returns, where tails are those handful of companies that actually make a really big difference in the performance. The same exact thing happened with Warren Buffett, right? A handful of companies are what made him the greatest investor of all time. If you remove those companies, his performance is actually pretty average and unimpressive. So if you can dollar cost average into the overall market through index funds, because those future winners will likely be in your portfolio. Now, when it comes to crypto, it's been chaotic to say the least. You guys might have seen UST being depegged, resulting in a catastrophic wipeout of Luna. A lot of people were really heavy on this project, and it was a shock to most of the crypto community. USDT also slipped below the $1 peg this past week, and crypto as a whole is down significantly, with Bitcoin dropping under $30,000. I'm going to echo the same sentiment as I did for stocks, and that is, since I do believe in crypto, I will dollar cost average into the top coins. I really do think that the altcoin market has lost a lot of trust, and the only way to make money in the long term is to hold coins that should stay alive forever. Those for me are going to be Bitcoin and Ethereum. So overall, you guys, this is a better buying opportunity today than it was yesterday, and it will be a better buying opportunity today than it will be a decade or two down the line when everything is way more expensive. So if your intention is to make long-term wealth, hey, hopefully you can see the opportunities that exist today in this current market. Now, unfortunately, if the markets do go down and we enter a recession, it's going to cause a lot of problems for a lot of people. As a result of economic factors, including inflation, 64% of Americans are actually living paycheck to paycheck. That of course means that you don't have any extra income to invest into assets. This is really sad because, having financial difficulties or living paycheck to paycheck really introduces a lot of stress to people. And like I mentioned, if you're paycheck to paycheck, you're only paying for the necessities of life. You don't have any extra income to invest in assets and stocks and crypto, and the result is a stagnation of your net worth. So we've talked about the current economy, we've talked about how you guys should possibly invest in your money, but now let's talk about the most important thing, which is actually increasing your income right now. I really do think that this is a very, very special time where if you're able to significantly increase the amount of money you're taking home, you're really going to set yourself up for financial success in the long term. Now is the easiest time to get rich. I truly, truly believe that. But I will say that it's only going to get harder and harder to make money. The internet has really allowed anyone access to entrepreneurship. And entrepreneurship, you guys, is something I talk a lot about on this channel. And it really is the ultimate way for you guys to start making significantly more money. I'm going to show you guys how, and it really all comes down to starting a service-based business. Here's the formula. The first step, you guys, is to find a high income skill. This can be literally anything, but for the sake of this video, I'm gonna use the example of learning a productivity platform like ClickUp or Notion. If you have a high income skill like this, you can actually sell this as a service to clients. And that brings us to our second step, which is to actually start getting clients. The first clients you get are going to be quite difficult, but through some word of mouth and through more marketing, you'll gradually build your roster of people that you work with. At some point, you're going to hit a ceiling because you no longer can trade your time for money. When this happens, you're going to want to start building a team. A team is going to allow you to actually get more clients and start building passive income. If you do these three steps, the amount of money you're going to be able to make is going to go up dramatically. It is extremely doable for a service-based business to start hitting six figures. And when you're making that much money, you just have so much money left over that you can actually, disperse into assets and investments. If you guys can make a lot of money right now when the markets are down, or if we enter a recession, that is going to be an absolute game changer. More people became millionaires during the Great Depression than in any other time in American history. Now, I'm not saying we're in a Great Depression right now, but I am saying that when things are hard, the opportunity to make money becomes that much more important. So yeah, I really highly encourage you guys, try and find some type of high income skill, start your own service-based business. And I really do think that a lot of you guys are going to be able able to replace and exceed your current income at your 9-to-5 job. This will leave you with more money to be able to deploy at such a crucial time, and it's really going to set up your future financial success. Anyways, I hope you guys enjoyed the video, and if you did, make sure to share with a friend, and also like and subscribe if you want to see more content just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.